the price, it's a lagging indicator. The price is a lagging indicator of Bitcoin. If you look at the way that the commitments on the investing on the network side, it's at all-time highs, and price catches up as it always does. And anyone who's held it for 4 years is in the black. They're making money. So if you can't hold your shit for 4 years, you shouldn't be an investor. Go to Las Vegas, play the slot machines and the roulette wheel, and have a couple of cocktails and go home. You're not an investor. If you can't have at least a 4-year horizon, you're not an investor. You're a gambler. You're a degenerate gambler, undoubtedly, and you should just go to the casinos and blow your cash and have a few cocktails and maybe get laid. But don't call yourself an investor if your time horizon is less than 4 years, because you're not.
So
hate to be harsh. I worked on Wall Street for many years, and I've had to give this speech to many, many people who don't understand the difference between gambling and investing. Okay, read anything by Peter Lynch. He'll say, 7 years minimum before anything pays off. Warren Buffett, what's your favorite holding period? Forever, right? So if you're looking at I'm up, I'm down, in the last 2 weeks, like, you need to go to the casino. You're not an investor. Go away, leave me alone, beat it.
Bitcoin starts one of the most important macro weeks of the year in a precarious position below $17,000. After its latest weekly close, Bitcoin showed little upward momentum prior to the December 12th Wall Street open. With volatility yet to appear, the largest cryptocurrency continues to trade in a narrow range, and analysts are increasingly impatient for new catalysts. These, they agree, should come in the next few days. United States economic data is due, and its content and impact on economic policy will likely have a significant impact on crypto markets. Hello and welcome to Money Talks. In today's video, Max Keiser updates about the volatility and price fluctuations in the Bitcoin space amidst the ongoing FTX collapse, his outlook for 2023, and whether or not his 220K prediction still holds firm for Bitcoin or not.
Right, well, the Sam Bankman-Fried story and FTX and FTT, which is their token, and Alameda, which is kind of the hedge fund, Alameda Research, that they created back in 2017. So Sam Bankman-Fried came out of a company called Jane Capital, and he comes from the very shadowy world, the very shady world of high-frequency trading and kind of the shadow banking system and the market making that's done kind of in the gray regulatory zone. And there's a lot of these firms that exist on the periphery. There's a lot of debate whether they're actually engaged in lawful activities or not. But that's where he came from. So he came out of Jane Capital. He started Alameda Research, which is another one of these market-making, high-frequency trading, arbitrage, chop shops that are very fringe in terms of whether they're legal or not legal. They exist kind of on the periphery. And he was engaged in a lot of skullduggery over there at Alameda. Then they decided to start their own exchange, FTX. And they lobbied very hard in the Bahamas, where they felt that they would get very little regulatory oversight. They went ahead and they bought 10% of IEX, which is another one of these shady peripheral exchanges, to give themselves regulatory legitimacy. They then floated a token called FTT, which is part of the whole scam token world that we've been talking about for a number of years, whether it's Ethereum or Cardano or FTT or XRP. These are just scam tokens. And he used that and listed it on other scammy exchanges to create a price, and then using that as collateral to buy assets like real estate in the Bahamas. And now, as all Ponzi schemes eventually do, they run out of kind of runway, and they crash and burn. So it is similar to Bernie Madoff in that respect. It's also similar to the 2008 financial crisis, where Wall Street spun out of thin air all these derivative contracts, and they created this multi-trillion-dollar Ponzi scheme that blew up finally in 2008, and with the help of the Fed and central banks to bail out all the crooked bankers once again. So there's a lot of similarities to that. There's similarities to the S&L crisis of the late 1970s, early 1980s.
The phrase on everyone's lips this week is Consumer Price Index, the key measure of consumer prices inflation in the United States. While coming every month, the latest CPI print due December 13th for the month of November has additional importance for the market. With 2 weeks to go until the end of the year, the chances of a risk asset Santa rally, for instance, now hang in the balance. It is not just the CPI report itself. The Federal Reserve's Federal Open Market Committee will decide on rate hikes, and Chair Jerome Powell will deliver a speech that market commentators will scrutinize for signs of policy change.
The direction, when you're talking about investments, you have to get a couple of things right. Number one, without doubt, the thing you need to get right more than anything else is the direction. Okay, the direction for Bitcoin for 13 years has been up, and it'll be up for the next 20, 30, 40, 50 years. So that's number one, that's solved. The direction is up. Then it's about asset allocation and how you want to scale into it. And that's up to everyone's individual style. I can't comment on that because different people have different ways of doing it. I think in the case of fiat money, you're guaranteed to lose purchasing power. Mathematically guaranteed to lose purchasing power with the dollar and all fiat money. With Bitcoin, you're mathematically guaranteed to increase purchasing power. It's like 2 + 2 = 4. You're going to have mathematically guaranteed increased purchasing power. With gold, okay, it's going to hang in there against inflation. Every time we talk, Daniela, gold's around $17, $18, $100 an ounce. That's been doing this for 10 years now. Maybe it'll break out this time. But I have a feeling that if we talk again in 6 months to a year, gold will still be at $1,800 an ounce, and everyone will be talking about it's about to break out, it's about to break out. It really, by definition, can't break out. It's too big, it's too concentrated, and it's not like it's not like it. It can't really outpace inflation dramatically. It's got to stay within a few percentage points of what the inflation number is. So that's gold. It's a great store of value over 100 years and 1,000 years. But if you want to pay for the storage, the transportation, the verification, and not have something that's completely immobile, can't move it around, and it can be seized. If that's okay with you, then gold's okay. If you want something that has a breakout potential that's far superior to gold, it's portable, it's unconfiscatable, it's immutable, it's uncensorable, it has everything but gold has, but 1,000 times better, then Bitcoin's for you. Well, we're here in our home, our new home, El Salvador, and where everything is looking great. The economy is up sharply. They made Bitcoin legal tender, and they're benefiting massively as a result. GDP up 10.3%, tourism up over 100%, employment up 7%, new business up 12%, exports up 17%, internal revenue up 37%, violent crime down 95%. So, this is an interesting decade, an interesting century where the U.S. is kind of on the way down, and El Salvador in the region is on the way up. What I've been saying are the people who followed me and bought Bitcoin under $10. Those people really love me, I can tell you. I get emails every day. I put my kids through college. I bought a new house. I did this, I did that. The love is just like a tsunami of love over here. And I think that for all those folks out there who want to put the research and do the work, they'll see that the current price is an excellent entry point with unconfiscatable, uncensorable property that's portable, and obviously is going to do better than any fiat money out there, and is superior to gold, in my opinion. And of course, other people have their different opinion. Where the price is going right now, the price is going higher. Like I said earlier, I look at the strength of the network is really the number I look at. I don't look at the price so much. I look at how the network is doing and how the hash rate is doing, and are people committing capital to the network. and that's at all-time highs. So for me, Bitcoin's at an all-time high today.
So, do you agree with Max Keiser's 4-year thesis for Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.